Good evening. I'm Krista Montgomery, joining you here from Bat Cave, North Carolina. As you have probably noticed, the price of oil has dropped recently. OilPrice.com reported a price of $84.47 per barrel of oil. Prices have been steadily dropping since a peak in June. Today's prices are 25% below those of June. Lower prices are exciting families all over the country and encouraging increased travel. The joy is not being felt around the world, though. In the Middle East, lower oil prices can damper economic growth. If prices drop below $80 per barrel, the oil-dependent Middle East economies will no longer be able to support themselves. This decline of oil prices is also impacting major petroleum exporting countries like Russia, according to a recent report by the New York Times. The tension in Russia has led to cuts in spending, which is a problem for countries like Russia that rely heavily on oil to support themselves. Now to Selena Patel.
The Russian government is already compensating for lost funding through the drop in oil prices. President Putin gave a statement about reducing spending. You know that energy prices have fallen, as well as for some of our other traditional products, President Putin said. Due to that, would we not, on the contrary, reconsider the budget toward reducing some spending? Current plans involve adjusting the budget and using the reserve fund created especially to accumulate crashes in oil prices. Selena Patel, Economics Channel, Russia.
Thanks, Selena. This week we saw a drop in the stock market. Today prices rose, bringing some confidence back to the market. The Dow rose 263 points and Nasdaq rose 41 points at the end of today. Despite today's rise, investors are observing a drop in stock market activity and a spike in bond activity. Bonds are generally viewed more positively than stocks because of the guarantee on a return of investment. The increase in demand for bonds is increasing the price of U.S. government bonds. Germany and some other European countries are seeing a drop in the 10-year yield from bonds. The Wall Street Journal reports Germany is the lowest, only seeing a 0.815% yield, and France currently is earning 1.3%, while England and the United States are both around 2.2%. These low yields have some investors and economists worried about the near future. Some believe that this is a sign of another economic downturn. On a more positive note, the current budget deficit is the lowest it's been in 6 years, reports the Wall Street Journal. The annual deficit for fiscal year 2014, which ended on September 30th, fell 29%. The deficit for fiscal year 2014 is $197 billion, less than the deficit from fiscal year 2013. This is the lowest the deficit has been since 2008. The White House Budget Director, Sean Donovan, says that this is a return to fiscal normalcy. The dollar fell on Monday, October 13th, dropping to a one-month low against the yen. The dollar dipped after Federal Reserve officials warned during the weekend that if the global recovery stumbled, it could delay an increase in U.S. interest rates. The dollar was down 0.3% to 107 yen and 38 cents, falling as low as 107 yen and 6 cents, its weakest level in about a month, and well off a 6-year high of 110 yen and 9 cents on October 1st. The euro rose 0.4% against the dollar and was slightly higher against the yen at 136 yen and 15 cents, having dropped to 135 yen and 56 cents, its lowest since last November. European Central Bank Council member Ewald Nowotny said the euro was very likely to keep weakening against major currencies, but there was very little impact from his comments. However, on Thursday, October 16th, the U.S. dollar recovered against the euro and yen. Our special correspondent, Selena Patel, has more on this.
I am here in Germany at the Frankfurt International Airport with Julie Patel from America. How do you feel about traveling in Europe based on the current value of the dollar?
I'm so glad I'm traveling now instead of a few months ago. Since the dollar is slightly stronger, I can afford to spend more on shopping and food.
Thanks, Selena. Global activity has strengthened and is expected to improve in 2014 and 2015, according to the April 2014 World Economic Outlook, with much of the momentum for growth coming from advanced economies. Although some risks have diminished overall, lower than expected inflation poses risks for advanced economies. There is increased financial unpredictability in emerging market economies, and an increase in the cost of capital will likely reduce investment and weigh on growth. Advanced economy policymakers need to avoid an early withdrawal of monetary accommodation. Emerging market economy policymakers must adopt measures to change fundamentals, facilitate external adjustment, further monetary policy tightening, and carry out structural reforms. That's it for our broadcast tonight. I hope to see you back tomorrow. Good night.